a news report that was dropped yesterday, actually, that was dropped on Tuesday. Yesterday is the day before I'm making this podcast. I make the podcast on Wednesday. You guys hear it on Thursday. Don't know why I need to say that. But anyway, this news report was dropped on Tuesday morning and everybody was flipping out on the interwebs. And basically, the news report was from ProPublica, who announced, they said, the secret IRS files, trove of never-before-seen records, reveal how the wealthiest avoid income tax, which is something that everybody has known happens. But this detail was like, whoa, this is massive stuff. But then there's some stuff that they added in there that I was like, okay, like, y'all going extra. But anyway, let's just go into the details of this thing. And I'll just read out some excerpts of it. And then I'll talk about some of the things that they said in there that kind of rubbed me, that kind of was like, man, I wish they wouldn't do that. But, whatever. So let's just get into it. So ProPublica has obtained a vast trove of Internal Revenue Service data on the tax returns of thousands of the nation's wealthiest people, covering more than 15 years. The data provides an unprecedented look inside the financial lives of Americans' titans, including Warren Buffett, Bill Gates, Rupert Murdoch, and Mark Zuckerberg. It shows not just their income taxes, but also their investments, stock trades, gambling wins, and even the results of audits. Taken together, it demolishes the cornerstone myth of the American tax system that everyone pays their fair share and the richest Americans pay the most. The IRS records show that the wealthiest can perfectly legally pay income taxes that are only a tiny fraction of their hundreds of millions, if not billions. Their fortunes grow each year. Many Americans live paycheck to paycheck, amassing little wealth and paying their federal government a percentage of their income that rises if they earn more. In recent years, the median American household earned about $70,000 annually and paid 14% in federal taxes. The highest income tax rate, 37%, kicked in this year for couples on earnings above $628,300. The confidential tax record obtained by ProPublica shows that the ultra-rich effectively sidestep this system. Americans' billionaires avail themselves of tax avoidance strategies beyond the reach of ordinary people. Their wealth derives from the skyrocketing value of their assets like stock and properties, which is a very key point to keep in mind when we get into this. Those gains are not defined by the U.S. laws as taxable income unless and until the billionaires sell. To capture the financial reality of the richest Americans, ProPublica undertook an analysis that has never been done before. We compared how much in taxes the 25 richest Americans paid each year to how much Forbes estimated their wealth grew in the same time period. We're calling it their true tax rate. And automatically, this document or this article just lost me. And I was like, what y'all trying to do? Like, whenever I start seeing articles like this and whenever they start pitting this whole idea of us versus them, I just start to lose interest in anything like that. But anyway, the results they came to said the results are stark. According to Forbes, these 25 people saw their worth rise a collective $401 billion from 2014 to 2018. They paid a total of $13.6 billion in federal income taxes in those 5 years. The IRS data shows that's a staggering sum, but it amounts to a true tax rate of only 3.4%. And then they compare it to a middle-class family. They say in a completely different picture for middle-class Americans, for example, wage earners in their early 40s who have amassed a typical amount of wealth for people their age from 2014 to 2018, such households saw their net worth expand by about $65,000 after taxes on average, mostly due to the rise in value of their homes. But because the vast bulk of their earnings were salaries, their tax bills were almost as much, nearly $62,000 over the 5-year period. And then they have a graph that shows like each individual. They have a little graph and table that shows like Warren Buffett. And this is where they basically lost me. They said Warren Buffett only paid about 0.1% in taxes. They said Jeff Bezos only paid 0.98% in taxes. Michael Bloomberg only paid 1.3% in taxes. Elon Musk only paid 3.27% in taxes. And this just basically lost me. At this point, I kind of got lost. I was just kind of like, this is a problem. This is a problem of what we need to understand. There are two numbers that we need to understand whenever it comes to taxes and whenever it comes to people and their wealth. One is wealth and the other number is income. The government cannot tax wealth. It is extremely difficult to tax wealth. However, the government can tax your income. However, the way the tax system here in the United States is built, it is built in a manner where people can take advantage of tax loopholes, which I'm not gonna lie, I take advantage of these loopholes, even though it's on a much smaller scale. I still take advantage of these loopholes. I started trying to take advantage of it this year when I got an actual tax accountant to be like, yo, how about looking over my stuff so I make sure I'm not missing out on any of these credits or any of these write-offs that I can have, and just making sure that everything is in the right way. Because I mean, when you do, whether it's a solo proprietorship where you like get any kind of 1099, there are certain tax codes that you can get benefits from because you are adding to the economy. You are helping expand the economy. And because the government wants you to spend your money in the economy and wants you to help grow the economy, the government is going to incentivize these things by giving tax credits or even giving you abilities to have write-offs. I mean, even for going back to school, there is tax credits. I was able to get like a good amount of money off of my taxes because I went back to school last year and I was able to get like, I think it was like $1,000 or so back just because I went back to school and I did higher education. So there are certain tax credits and certain write-offs that you can do. For example, my cell phone that I use for work, that I use whenever I ref soccer games, I get to write off depreciation on this cell phone. Why? Because I use it for business purposes. You can do those kind of things. Now, should the rich should be paying so little in taxes? No, they should definitely not be able to get through all these kind of loopholes. I mean, it's ridiculous. I mean, one thing I agree with the article is the fact that, oh my gosh, they get out of a lot of stuff. Like their tax rate is so much lower. Like when I looked at Warren Buffett, for example, who's like one of my favorite people, and he's been saying it for years that the rich need to be paying more taxes, but he's not dumb enough to be like, yo, the rich need to be paying more taxes, so I'm going to be paying more than I need to pay in taxes. No. That's not wise. That's not wisdom. Just because you think something should change doesn't mean that you should be the one to come and bear the brunt of it. No, you take advantage of the system that is in place. But anyway, for years, he's been saying that we need to increase the taxes, especially for those in the higher income. But regardless, when you look at his actual tax rate, he paid a total of $23.7 million in taxes from 2014 to 2018. However, total income, he reported $125 million. That comes out to about a tax rate of about 19%, which is right around what I pay in taxes, which is just like, what? Like, how is he paying the same amount in taxes, even though he's making buku loads of way more money than I am, but he's just taking advantage of the tax system. However, his wealth in that same time period grew by about $24.3 billion. But I think the main thing is we need to start distinguishing wealth from income. Like these are two very distinct and different things. However, right now, what this article has done and what most people start to do with their hashtag eat the rich stuff is they just look at, oh, Jeff Bezos is worth 180 something billion dollars. How can he only pay or how much did he pay? He paid $973 million in taxes. How is he able to do that? Why should he be able to get away with that? Because his actual reported income, which is what you report when you fill out your taxes, it was only $4 billion. Now, should it be closer to about $1 billion rather than 973? Maybe that's a discussion that we can have where we can say, okay, some of these tax loopholes should maybe be eliminated. But at the same time, for the United States, for the system we have here in the United States, it is designed so that businesses, so that people can take advantage of the taxes, so that you can have certain write-offs, so that the economy can keep growing, so that people are incentivized to invest their money in the economy, so that people are incentivized to give their money to businesses to continue to grow. Because the one thing you have to learn is usually the people who are the wealthiest are also the stingiest with their money most of the time. A lot of them are now just going to spend money on a lot of things. However, if you incentivize and say, hey, if you spend your money on something random just to put back something into the economy, we will give you a tax write-off. They're going to do it. And that's how they've been able to do a lot of this. And the thing you have to think about is this is not illegal. A lot of people think that, oh my gosh, they're avoiding all these taxes. This is illegal. No. This is perfectly legal. These are things that are put into the tax code to ensure that people can invest, can get some write-offs for doing some kind of business venture, or maybe you're just delivering for DoorDash. Did you know that if you're delivering for DoorDash, you should be doing your taxes and getting write-offs on your cars, getting write-offs on you getting oil changes, getting write-offs on you buying gas, getting all kinds of write-offs if you do like something like DoorDash. If you buy shoes for your work, you should be getting write-offs for those shoes. If you buy anything for work or for anything like that, you should get some kind of write-offs. You should find ways, if you're doing some kind of side hustle where you get paid for that side hustle. One of the things, if you're babysitting and you incorporate your babysitting, or you make an LLC for your babysitting stuff, you can get write-offs for driving to the babysitters. You can get write-off for using your phone to show the baby videos to watch on YouTube. You can get write-off for using a Netflix subscription that you have for the kids. Stuff like that, you can get write-offs on it. But my main point is, I just want us to get out of this mindset of just being like, oh, these people made this much money, they should be paying way much more in taxes, or rather, these people's wealth grew by so much. My argument, whenever it comes to these kind of things, my point that I like to bring up is, so if we say that, yes, they should pay more of their assets because their assets grew so much, they should be paying taxes on those assets. The other question I have to ask you is, if the asset falls the next year, should they get the money back from paying all those taxes? Because you have to think about it that way. It's a slippery slope. The problem that most of us don't think about is that it's not just one person who gets affected by this. It's everyone who's going to get affected by it. Is my parents now, because their house is worth more, should they have to pay taxes on their house value because their house value grew a certain percentage? No, that doesn't make any sense because they haven't sold the house. They shouldn't have to pay some kind of an exorbitant amount of taxes on something that they haven't sold off yet. So we have to be careful whenever we start going down this rabbit hole of saying stuff like, oh, the rich should pay more taxes on their assets rather than on their income. Now, should they be able to write off as much as they can write off and have all these loopholes where they send their money through all these different things to make sure that they don't pay as much in taxes and all this other stuff that they do? No, that's a different discussion. However, when the discussion is just focused on them paying more because of their wealth grew a certain amount, I don't think that's the right way to go about it. I think we need to really think about it in a different way. I think we really need to stop looking at it as we need to take away from these certain people so that we can have for everybody else. I don't think that if we just took like half of everything that these guys have and gave it to other people, that that's going to make the wealth inequality issue go away. I don't think so. I think we need to find other ways to bridge that gap. We need to find other ways to get people to have more assets, for people to be able to build wealth, whether it's through things like if a baby is born, $1,000 in equity is given of U.S. companies so that they have a piece of the wealth being generated by U.S. corporations. Or maybe we help people when they lose their jobs like we finally did last year. Like maybe we don't just do bailout for large corporations, but we actually help people who are losing their jobs whenever we go through a recession through no fault of their own. Things like that. That's probably what we should be trying to do more than trying to take away from all the other wealthy people. Because if we're being honest, if we're being completely and totally honest, as much as people may hate Bezos, may hate Elon Musk, may hate Warren Buffett, may hate Michael Bloomberg or any of these folks, the fact is, if you're completely being honest, these guys have generated a lot of not just wealth, but also income for a large population. I mean, if we just take Amazon, for example, Amazon has created over 1 million jobs, 1 million jobs from one company. I mean, if you look at Warren Buffett's, from the various businesses that Warren Buffett's company, Berkshire Hathaway owns, they created over 500,000 jobs, a bunch of different jobs from this business. And plus, not to talk of all the shareholders, myself included, who has benefited from investing in these businesses. And there have been so many people that have become millionaires just because they invested in these businesses. So we can't just be like, oh, these guys, they're just so evil. They create and take all these things for themselves. No, they have created wealth and income for so many people in so many different ways. So we have to put that into perspective as well. We can't just look at one side of the coin. We have to look at both sides of the coin. Now, do I say, again, I'll go back to this. Do I say that should they be paying higher taxes? Probably. Do we need to find ways to make that happen? Probably. But at the same time, it doesn't mean that we should be like, oh yeah, we just need to start taxing the wealth side of things, because then we go down a huge slippery slope. And that's a whole different argument, a whole different problem. But anyway, I cannot believe that these guys just made me defend these guys. Like, why are you making me defend billionaires? I don't want to defend billionaires. They're billionaires. They don't need my defense. They don't need me to defend them. But this article is just, it just makes me so annoyed because I don't want to be defending these guys because they make enough money. They'll be fine regardless. And you're making me defend these folks, man. Making me defend these guys. The other thing to think about is like people like Warren Buffett has already pledged that when he passes away, all of his wealth, not like 0.1, no, all of his wealth is going to be given away. And then for people like Michael Bloomberg, about 75% of his wealth is being regularly given to charities already. So just a couple of other things to think about. I'm just saying we really need to start looking on both sides of the equation and not just one side of the equation. But anyway, moving on from there. Last week, we got the job numbers for the month of... I hope you enjoyed that little snippet of the Rambling Mind podcast. If you want more of the Rambling Mind podcast, or if you want to listen to the whole episode that you just heard, go check it out on any podcast listening platform, whether that be Anchor, Spotify, Google Podcast, Apple Podcast, Breaker, Stitcher. I could go on, but you guys already know which podcast you love to use to listen to. So go check it out. Link down in the description as well. I'm going to catch y'all later. Peace.